Johannesburg, Reuters. South African consumer price inflation slowed to its lowest rate in 7 years on Wednesday as the end of the worst drought in decades helped push down food prices, data showed on Wednesday. A customer shops at a Shoprite store in Johannesburg, September 7, 2013. Reuters. Siphiwe Sibeko. The rand briefly rallied to a session high after the inflation data before easing back above the 12 per dollar mark, with investors doubtful the unexpectedly low reading would be enough to persuade the South African Reserve Bank to cut interest rates more. The rand later rallied again to 11.9650 per dollar after data showed February retail sales climbed as price growth slowed. Headline annual consumer inflation slowed to 3.8% in March from 4.0% in February, the lowest figure since January 2011, Statistics South Africa said. Month-on-month inflation slowed to 0.4% from 0.8%. While the inflation numbers suggest there is a good argument for accommodative monetary policy, leaving rates unchanged to us would be relatively accommodative, said Nedbank senior economist Nikki Weimar. Economists polled by Reuters had expected prices to quicken to 4.1% on an annual basis and 0.6% on a monthly basis. Bonds firmed up, with the yield on the benchmark 2026 paper dropping 2.5 basis points to 8.045%. Needless to say, this is good news for South African bonds, said chief Africa economist at Standard Chartered Razia Khan, adding that she expected inflation to stay well within the central bank's 3 to 6% target band in the medium term. It does not, however, change our view that we are unlikely to see further sharp easing in this cycle. Khan said. The central bank cut its main interest rate to 6.5% in March but warned that inflation was at a low point in the current cycle and that it expected consumer prices to rise above 5% in the medium term. A 1% increase in value-added tax came into effect on April 1 and will put upward pressure on prices, analysts said. Retail sales rose 4.9% year-on-year in February after increasing 3.3% in January, with analysts saying lower inflation and the looming VAT increase had encouraged spending. It seems consumers were front-loading purchases ahead of the VAT hike, so we expect a similar bump in the March figures, said Jana van Deventer of ETM Analytics. Forward rate agreements due in 3 and 6 months were both pricing in a less than 0% chance of a 25 basis point cut in interest rates. Eskom tariff looms. Nedbank's Weimar said that along with that the biggest risk to inflation was the possibility of a large electricity tariff increase by power provider Eskom, which is seeking to recover 67 billion rand $6 billion in higher than forecast operating costs through higher tariffs. What happens to Eskom's electricity tariffs will be very important. It will be applying for fairly steep increases and that could certainly see inflation trend much higher. Weimar said. Food price inflation, a major concern for the Reserve Bank in the last 2 years due to drought, slowed to 3.5% year-on-year, having hit 11.8% in December 2016. We could see the decline in food price inflation start to moderate in the next few months, as base effects from the drought start to dissipate, said Investec chief economist Annabelle Bishop in a note. $1 equals 11.9855 rand, editing by James Macharia and Hugh Lawson.